Good afternoon. Welcome to daily currency update from the currency desk. On Thursday, what we have seen in the currency market is dollar again reaching new highs. The intraday high for the day was 56.30. Again, we had lots and lots of buying from the oil importers. What is worth noting is that the USD index, which measures the value of dollar against 7 major international currencies, is up at a yearly high. This yearly high is 82.25. So again, this would put in more pressure on the rupee against the dollar, and we would see again dollar rallying and creating further highs. In terms of Asian markets, what we saw in the morning was that all the Asian economies, Asian markets were trading lower. This was mainly due to the lack of support from the EU leaders. Also, what we saw, the China flash manufacturing index was down at 48.7 versus the April figures of 49.3. This is the 7th consecutive time that we have witnessed a fall in the PMI figures, and also it is said that if the PMI figures are below 50, it means a major slowdown in the economy. So as long as the PMI figures sustain below 50, it indicates a hard landing scenario for the China. We expect the dollar to move up till 56.51 in the spot. At the same time, if this 56.51 level is sustained for a longer period of time, we could well see the dollar moving up to 57.85. In the Eurozone, we have seen is that the Greece political turmoil continues. We had the Eurozone leaders meeting. There was no specific outcome that came out of it. The major two outcomes expected from this meeting was, one is whether Greece would be allowed to ease the austerity measures. The other thing was the Euro bonds. Now this Euro bond is a collective issue of debt by the Eurozone. This again was sidelined by the EU leaders. So what we are seeing is that there is no particular progress or no particular changes brought about by the EU leaders. This has again caused the euro to fall. Currently the euro is trading at 1.2574 levels, which is quite a low level, and the support at this level is 1.25. The European leaders also emphasize that Greece should stay in the European Union, but at the same time they are not ready to compromise on the austerity measures. The Greece is very firm with his anti-austerity stance, and until the political scenario is stabilized, we could not witness any outcome from this, and the uncertainty obviously would go on increasing. In euro, we recommend a hold long at current levels, and the target would be 71.28. In the UK economy, today we have the GDP figures which is due. The GDP is expected to be lower as compared to the previous figures, but this would not have any major impact on the pound, as we believe that this low GDP figure is already been incorporated into the current rate. And as we have seen in the past few days, the pound has fallen down about 200 to 300 points from 1.62 levels to 1.57 levels. Hence, we expect that pound would stabilize at current levels, and on the contrary, we might witness some appreciation also in the pound, not only against the dollar but also against the rupee. In terms of pound against the INR, we recommend a hold in long positions with a target of 89.45. The Japanese economy showed a trade deficit which has widened as compared to the previous month's figures. This was as line with expectations and as predicted by us earlier, as the main reason for this is seen as the increase in the energy imports. But still, what we have seen in terms of the yen is it has rallied a lot on basis of safe haven demand. This is majorly due to the inflows into the Japanese economy. A proof of this is also the fact that the bond yields have been falling. So as long as we see the bond yields falling in the Japanese economy and the Japanese yen rallying, we can easily state that all the trade deficit would be compensated by the inflow of the funds. In terms of Japanese yen, technically we also recommend a buy at current levels or hold long with a target of 71.23 in the spot. Thank you.